Welcome back to Double and Nothing. You're listening to Misha Saul and Michael Frazis. It is the 1st of February 2023. Michael, we've taken probably our sweet time getting into the first episode of Double or Nothing. How are we going to kick off 2023 with this episode?
Good to see you, Misha. It has been a while. I reckon there's been a few developments this month. I mean, there was a pretty big rip in financial markets, which is obviously quite helpful for us. There was also, since we last spoke, an inflation print, just kind of reaffirmed what we were talking about last year in the sense that, it came in at minus 0.1%. And that's kind of quite relevant to what happens next because, it really suggests that in the near term, we'll reach that peak rate. Which at least means that rate of change of interest rates is kind of going to be very different this year than last year. And a lot of wood has been chopped. There's been a big sell-off and things have now kind of gone sideways for 6-7 months. Coming up to 8 months now. So it's a pretty interesting pivotal moment, I think. This is kind of the moment where the crash kind of happened a while ago and now the dust is kind of settling. And now you're getting quarter after quarter, kind of post-crash, where you really have to see how companies are performing. How's the start of the year been for you?
Good. We signed a deal 31st of December, so it was a pretty hectic run up to through the new year, literally at 10:30 p.m. New Year's Eve. And other than that, both my kids are starting a new school this year, so there's been a lot of parental nervousness. Feels like they're kind of growing up and the like. No, I've got 3 kids, so I should say 2 of my 3 kids started school this year. So lots happening, but it's been beautiful in Sydney as well. Listeners who are locals will remember we've had years of crummy summers of bushfires and smoke or torrential rain, and it's actually been a gorgeous summer. So it's been an absolute lovely time in Sydney. We closed a deal, kids starting school, so it's all coming up, all coming up good. It's all happening. So I mean the macro thing's interesting. I mean you will recall every time we kind of talk about macro, I kind of tune out / I'm skeptical. I'm not really a macro guy, but it did seem to be that inflation's higher than expected, which means that kind of interest rates are continuing to go up, at least for a bit, which kind of, in my mind, basically means house prices, will probably continue to be hurt in the near term, which is a good thing as a non-home owner myself. That's probably my selfish observation. I think it does seem though that all tech valuations have settled. It's probably a lot of the multiple compression that's happened over the last 12 plus months has probably happened, and from here on in it's probably going to be company performance is probably going to be fundamental driven going forward. And so they just kind of need to deliver. Obviously, a whole bunch of tech firms have kind of cut costs. And so the big question is, can they maintain top line growth in the face of those cost cuts? And frankly, we don't know how that's going to play out. We think that, we've got a bunch of, conversations going on at this time. We think, we're probably optimistic about our ability to do deals this year, so should be an exciting year.
Yeah, definitely. I'll show you. I'll go a bit deeper on one of those points. So on that CPI point, actually we can see these slides. We're using a new platform, so it's very experimental. Basically, if you take the last 6 months and extend that out, so the CPI change in price level in the US 6 months, extend it out. The black line you can see is what inflation does by June this year. And you can see it kind of crosses below 2% in May, which is only, 2 or 3 months away. By June will be below 1%. And this is from the Fed's numbers. This is just literally just taking the actual CPI, not doing any crazy adjustments, and extending out where that extending out the trend from June till today. And there's a couple of other points there. We said before that like shelter was the major component for the last 6 months, and that is still true. So you can see these slides in the last 6 months, almost all of it has been that green bar. And that's actually flipped. That has completely changed. That's flipped negative. But the CPI data the Fed uses only counts rents as they kind of roll off. So you can imagine as people change houses, they're a tiny proportion of the number of people in the price level that the Fed's using. And it actually worked really well a year ago, predicting the increase in inflation as well. So it's not just one-sided. If you use live data, so you can obviously see where rents are almost instantaneously because there's so many houses and apartments on the market at any one time. That gave a really good signal that inflation was about to massively increase long before it came up in CPI because it was so lagged. And now that same kind of thought process shows it will decline. And then you also have, the fact that they're going to raise rates almost certainly tonight by 25 basis points. And the latest rent rises haven't even been taken into account. So if you put all that together, there's a good chance that this CPI chart is actually optimistic. And over the coming months, the change in CPI from shelter comes into play, and also whatever impact these rising rates have comes into play as well. So that's kind of interesting, and it's relevant for things like valuations. So you mentioned valuations have settled. This is a chart that kind of shows software, like a basket of software. You can see they peaked at like 16 times sales and came all the way back down to 4, which is where it's bottomed, in the last kind of 10 years, a couple of times. And the last time actually it went this low, the index went up a crazy amount. It went up tenfold. I think it was more like 11 or 12-fold from 2016 to the peak, and about 5 times from the low in 2016 to where we are today. And that's almost all entirely organic growth because the multiples are basically the same as they were. So it's really just organic growth, even adjusted for stock issuance and change in number of shares. This is what the return that you would have got, 5 times from low to low and kind of 12 times from low to high. And that's in 5 years. So that was this is the kind of reason like we invest the way we do. We're kind of like going for these kinds of returns and these kind of profiles. But then obviously there's periods like the last kind of 2 where it's just been serious compression. But I think about like where you're playing in private equity, if you can buy these assets privately, maybe without, I don't know how you're going to structure them, presumably with some kind of debt, and you can ride those trends and get those like 5-fold increases. Or even if you can get your timing right, not that you necessarily can time markets with any consistency, but you kind of know when it's like summer or winter, right? Like if you can sell them during summer, you get pretty spectacular returns. It's pretty exciting.
I mean, that's the idea, obviously, for private equity. Private equity has the luxury of choosing its exit window, hopefully. That said, I'd kind of temper some of that. I think, we're obviously bullish software and technology. That's like obviously the game we've kind of chosen. That said, I think a lot of the trends we've seen over the last decade, some of them are multi-decade, and we'll continue to see tailwinds. And obviously, we believe in the structural tailwinds of software and technology. But others, are beginning to pass. The transition from on-prem to cloud. There's a lot of value to be, low-hanging fruit to be picked there. We're absolutely seeing saturation in a range of TAMs across a range of verticals. So that kind of S-curve that we've seen over the last, call it 5-10 years, has played out in a lot of immediate verticals. And so, going forward, there may be decent growth, but it may be tempered in a range of places. Some not. Some have kind of infinite growth, but some are much more narrow. And so you're going to start seeing things, more global plays, more horizontal plays, consolidation plays. So it's probably, last 10 years may be a little unique in terms of some of the aggressive tailwinds. That said, new oceans are kind of arising, new horizons are kind of appearing. Most notably, you'd have to be living under a rock not to have seen what ChatGPT and AI are kind of doing over the last month, and it feels like we're in the real early innings. If you've used ChatGPT, you'll notice a bunch of faffing and a whole bunch of censorship, and you'll notice a whole bunch of really coddled responses or false responses or strange responses. But that said, it's true enough and quick enough and impressive enough that you can see the curve of improvement quickly eating a whole bunch of low-hanging workflows and kind of queries and search. You can see the underlying search capability and the kind of text generation, and that's unbelievably impressive. I'm obviously the millionth person to kind of note that, so that's not an original insight. Obviously, Microsoft had the big deal with OpenAI and invested at the 10 bill val, and so they're seeing it, and the kind of benefits to them are obvious in terms of integrating it into their into the Microsoft suite of products. So who knows what opportunities that creates. That's probably going to begin to permeate a lot of industries pretty quickly. It's already kind of being integrated in a range of low-hanging workflows as kind of productivity improvements. So I think to kind of go back to your initial point around the upside, maybe we definitely don't aggressively play that timing game. I think it's a fair thing to say you can kind of take a view whether you're in the top half or the bottom half. We think now is a good time to invest. But again, it's probably a boring answer, but the details matter, and you need to be kind of selective because there are a range of businesses that have been investing in kind of growth at all costs, that the kind of the chicken's going to come home to roost, so to speak, and others that will continue to grow even in the face of cost cutting.
Yeah, I mean, in US software, it seems to be kind of maybe three components of it. There's the companies that have been absolutely smashed down to one-time sales. Like your Twilio's, 4 bill cash, 4 bill revenue, 8 bill market cap. I think that's something like that. Then those numbers at the lows. And there's the high, fast-growing companies like Datadog, Cloudflare, Snowflake. Everybody there's a broad consensus they're best in class. They've kind of come down from 50 to 100 times to 10 times. But when you're valuing these things, you can really make a case for either. You could argue that they're worth only a few times sales, or you could argue they're worth a lot more than that. And then there's kind of the middle, I guess the high-quality ones, like your Salesforce, Adobe, ServiceNow. It'd be interesting to see which of those kind of groups does best going forward. Will it be the Twilios went from $400 to $50 and are now slowly starting to grind up? Those things could double or triple quite quickly, and the story will be more or less exactly the same. Or will it be the compounders, or will the ones that are actually growing faster, will they actually, deserve the valuation premium they've got? I think that's kind of, it's not really a question you can answer with any conviction, but it will be interesting to see that play out.
It is interesting. I mean, they all, again, I can't speak to any of those specifically, and obviously I don't really play in kind of big cap US tech. So, this is kind of speaking a little from afar, but each of those dynamics are quite different. Twilio's dynamics are impressive and kind of global, but they're very different to say Adobe's. Adobe's, one of its treasures is that it's really, it's kind of sitting on a monopoly in terms of, PDF is the preponderant kind of system that it kind of owns, and so it kind of, globally, and so, underneath, it's only one of its verticals, but a lot of its competitors are kind of competitors that live by Adobe's grace, because Adobe doesn't really want to appear to be a monopoly, and kind of creates a whole bunch of businesses around it to kind of hide the fact that it's sitting on these kind of scarce monopoly assets, which again is fine. It's a position of immense strength for Adobe, but it's a very different position to Twilio, which is really in a global cutthroat environment. And again, Twilio has certain impressive product and go-to-market features, but it's very different to sitting on a giant global monopoly.
Yeah, absolutely. I guess we just have to see those play out. I mean, the striking thing is throughout this period, for all the talk of contraction and recession and all that kind of thing. I mean, firstly, on the bigger picture, we're February now, 23, and the recession hasn't come that was called for so strongly last year. Secondly, all these companies are still posting pretty strong growth numbers. Yes, growth has slowed down, but you're still seeing like 30% on average for that basket of software stocks that I was talking about. And that now covers the full period of contraction, or so-called contraction. I don't know if you can really call it contraction. It seems like a lot of people are throwing around the word reset. Maybe that actually will end up being the correct way to talk about it.
There is a sense of global optimism. I mean, the kind of pandemic is behind us. We're in a moment of US, kind of reassertion of its ascendancy and its supremacy globally. Russia has come out far the worse in its kind of fight in Ukraine. The US has kind of emerged kind of indefatigable there. China is kind of appearing weak and slowed down by its kind of continued battle with COVID. And in the US, we're seeing, new horizons. Not only are its traditional power bases in energy and its industrial base kind of rearing, but, we've seen the emergence of the new frontier, another new frontier coming from the land of infinite frontiers, with AI and the like. And so it's hard not to be very bullish the US. Some people might think that's a good or bad thing, but just regardless, it's it's just seeing, and that's probably ultimately good for equity markets, I would have thought, given the massive weighting of equity markets to US equity markets. And so there's this kind of renewed optimism. So, we've kind of been, near to medium term bearish in terms of maybe there's a recession coming. Maybe it's kind of hard to see what the catalyst of that would be, especially with all these kind of, with the US kind of roaring and Australian, Australian energy roaring, and Australian, Australian sectors seem to be going pretty well. So, look, the kind of post-tech crash seems to have settled, and right now it's always hard to kind of step out and what's the kind of 6-month view, but I think the current view, and maybe just the beautiful Sydney weather, is that it's hard not to be optimistic.
Yeah, isn't it incredible? That AI thing, I cannot believe that I can't believe it came out of the same place that so many of these other innovations came out of. Like, not just like the US, but the West Coast, not just the West Coast, but San Francisco, like Silicon Valley. It's incredible.
It's an age of wonders, and it's a place of wonders. And, we'll look back at Silicon Valley and its creations, in the same way that, we look back at the Renaissance or, other great moments in history and in time. And we're absolutely at a pivotal moment in history. And, I'm kind of just watching from the sidelines, but it's kind of amazing to see it happen.
Can add this to the picture then, that like investors are basically maximum underweight technology in the US, and you're still coming off a huge kind of sell-off. Like, and it's not just kind of software. So semis, that's one thing I missed over 10 years, and it drove me nuts, kind of looking back at how well those companies did. But we did kind of buy some of the leading companies a few months ago, which has helped us. Semis are like notoriously cyclical. And you've got this PC and mobile collapse because everybody bought their phones, upgraded all their stuff over the last 2 years. But then you also have this incredible demand shock from AI. And at some point over the next 6 to 12 months, that PC mobile cyclical low will probably turn into the opposite, where everybody upgrades the stuff they bought, 3 or 4 years previously. A search on ChatGPT is like apparently 100 to 200 times more computationally intensive. The first number I saw was 7 times, but apparently it's like 2 orders of magnitude more than that, or 1 order of magnitude more than that at least. So that means you could very quickly, and this thing's running at capacity. So in US times, you don't really see it in Australia, but in US times, because we're on a different time zone, but in US times, apparently most days, it's like, you can't access it. It's just too many people using it. You kind of have to pay to play now. The demand for this is going to be immense. So that means immense demand for computation. And that helps everyone from ASML, who makes the machines and makes the chips, to all the kind of people in the supply chain. It's highly consolidated across many companies that basically have their own monopoly over one piece of that critical supply chain. And then you also have governments deciding they want to onshore development as much as possible and move as much of that manufacturing out of Taiwan as they can. And all of that, like, again, you compare, that age of wonder kind of stuff that you're talking about to that. There's like a dissonance now between like positioning and the way people are thinking about portfolios and like kind of what's actually happening in the world. And I felt like
I kind of get that. I mean, like, just because, OpenAI is going to change the world. It's hard to actually, I mean, maybe semis are the way to play it, to your point. I don't know, but the kind of selling picks and shovels to the mine thing kind of just intuitively makes sense. It's not a super original insight, but like, that's plausibly the case. But, I'll make the case for being long other sectors. I know this isn't long your fund, but, I'm long coal, and that's played out very well over the last year. I think if you were long a range of industrial sectors, that would have played out well over that period of time, or energy. So, and how do you be long AI today? Maybe Microsoft, and maybe maybe some of the others. Maybe we are on the cusp of living in this immersive VR world, and maybe Facebook and Meta are the way to play. Who knows, right? But the on the other hand, how many industries are going to be commoditized, and an industry can be massive and hugely value creating, but may not capture much of that value. Now, OpenAI may capture it, but maybe all the ancillary industries will get crushed, as a result. So, it's not obvious to me. I mean, certainly everyone should just funnel all their money into your fund, but it's not actually obvious. So no, that was extremely tongue in cheek. No financial advice on this podcast is ever given. It's not obvious how to kind of play that directly, and it will be obvious in hindsight. If Microsoft becomes a $3 trillion business over the next 5 years because of this, everyone will be like, obviously that was going to happen, and they invested in OpenAI, but everything's kind of obvious in hindsight, but or plausibly, this kind of engine becomes hyper commoditized, creates enormous value, and just captures very little of it. So
some of the models are open source, and everybody's trying to kind of create things. Look, I think like if any percentage of Google search goes to ChatGPT, the computation is just intense. It's just immense because it's so much higher. I mean, and it's not like Google. It's not like that's that easy to scrape the world of internet of data that Google does. That's already incredibly computationally intense. But to actually go through these models will be even more so. So I think there is case for that. Google versus Microsoft is fascinating. So Google's the one with the most to lose here, and probably spent the most on AI, and most of the developments kind of came from them. Even Facebook obviously spent a fortune on AI over the years. Both of them have developed ChatGPT-like, I guess you could say competitors, but they're not really competing with OpenAI because they didn't release the products. So had these products, we know they're good. And I think I mentioned this on the podcast before, but there was that time when that Google engineer thought it was sentient. Like, having played around with these, I have no doubt that ChatGPT could convince you that it's sentient. Like, it's like passing a Turing test or a basic Turing test with like a person, which is trivial for that thing relative to where it is now. But they didn't release it. So why? And I can see why. It's like Google releases a product potentially competing with search. Any issues they have are going to be like hit really hard reputationally. And it's potentially cannibalizing their main products. There's probably some internal politics. And it's also like, it's not clear today how to monetize it. I mean, people will pay up for ChatGPT. Like, the answer is probably just to charge people to use it for a much better search experience.
They are now, aren't they? They're, like, on the downtimes, they're charging $40 a month or something. I don't know. It's something like that.
I use it all the time. It's kind of immensely valuable. And who knows what the price of that is? Like, $40 is cheap relative to what it can do. But so Google has decided not to release their product, probably because it wasn't quite perfect, and potentially because they weren't sure what it was going to do to advertising. Because it's not clear how it's, even if there almost certainly will be a way to monetize it. It's probably not advertising for ChatGPT. You don't really want to see ads next to your ChatGPT search; it just ruins the flow. But what a strategic moment for them, because Google search was like unassailable until a few months ago, and now all of a sudden, key things that people search for, like how to do things, education, not necessarily which car to buy, but maybe at some point even that starts going to ChatGPT, where you ask it to summarize different features and all that kind of stuff that Google would be clicking around. Maybe the ChatGPT can just give you like a list of cars and the features that you're interested in.
It's amazing. You can format things in different ways. I mean, it's just it could be the Google killer. It's amazing.
So why is Google not releasing it? Like, what a moment for them. And from the outside, like I'm always worried. Like, we're talking about Adobe with their massive acquisition last year, and I think the conclusion was we can kind of speculate from the outside. We don't really know what the strategic calculus is internally, but from the outside, this looks like a huge mistake. I mean, it looks like they should put that product in the market, improve it. If it's bad, just do it again. They cannot lose here. It's like when Apple had to have a Maps product. And they released Apple Maps, and then all the bloggers got like, "Oh, nuts! Look, this part of the world looks like a waterfall. Or you got this wrong here." But they had it. They put that thing out. They had contact with the enemy. They improved it, and now it's more or less as good as good. Like, they're basically the same products. But they had to do it. They had to release it. They had to get it out. They had to get millions or hundreds of millions of people using it, if not billions. Probably not billions for Apple. But I feel like Google desperately needs to do that now. Like, whatever they've been working on with their tens of billions of dollars of spend, that needs to be put in the market. They can charge for it, offer it for free as a beta, selected users, whatever it is. But if they drop the ball on search, that would be incredible, wouldn't it?
So to switch gears, there are two more things I want to talk about. I'm keen to hear about your experience as a comp sci student. And before we jump to that, I want to share one experience of mine over the last couple of months. I have, over the last couple of months, got addicted to chess. And so I've been playing on my phone. This is after playing only periodically over the last decade or so. And you can just download chess.com and basically play someone similarly ranked to you globally anytime. Because I don't know how many people, like almost 1 billion people use it. Like it's like insanely popular. And so there's just a very liquid pool of people around your rank. And if you win, you play someone stronger, and if you lose, you play someone weaker, and so on. And I have, and this may well reflect more on me than anything else, but I have found it a uniquely deranging experience. I obviously enjoy playing chess, that's why I'm doing it, but the feedback loops are so rapid. So say if you're playing a 5-minute rapid game chess, you can play through quite a lot if you're just sitting at home punting on the couch and burning time, which is basically what I've been doing. And it is and so you're getting feedback loops constantly. Either you're winning, great, so you might win 5 games in a row and you're a hero, but each time you win, you increase in rank. And so you're always at the coalface of playing someone who's then a bit better. And so no matter how good you are, so say you doubled your ranking, quickly, which would be unbelievable, then you're just playing someone who's twice as good. And then, so naturally what happens is you don't actually just keep winning. You kind of win and lose, win and lose, win and lose, go winning streaks, losing streaks. And ultimately, a good outcome is that you kind of incrementally improve your rank over time with some vicissitudes in between. And it's totally deranging because, you're constantly getting these feedback loops, because you're losing because of mistakes or whatever. And so it's, and so every 5 minutes you're being told how much of an idiot you are, basically. And it's hyper competitive, and it just puts me in absolutely foul mood. Like and my wife immediately goes to me, "Misha, you've been playing chess again, haven't you?" I'm banning it, I do not play it around me, because I just turn into a worse version of myself because I'm constantly at the coalface of these feedback loops telling me how much of an idiot I am, basically. And so, again, I don't know if this is like a universal experience, but the structure, it's such a sophisticated, elegant mechanism. It's honestly, I mean, I imagine it's kind of like trading the markets every day. Like, no matter how good you are, you're basically, yeah, it's just emotionally, you're always wrong, basically. And so it's been driving me absolutely bonkers. And it's eating a bunch of time, and I can't get off it. But it's actually turning me into a much worse person. So I've tried to, you can try to be equanimous about it, and try to like take a step back and go all stoic, and try to control it. And I'm trying to work on it. But ultimately, I found just being self-aware of that kind of detrimental effect has been it's kind of curious.
Yeah, I mean, it's a great observation that because of the rating system that you're constantly just paying a little bit better. So you're constantly mostly losing. It's very frustrating.
That's right.
If you win, then you just level up a little bit.
Yeah.
There's a huge boom in chess. And again, it's one of those things where it's kind of like a really niche thing. COVID comes and bang, anybody who had a YouTube channel becomes like a celebrity, because everyone just had so much time and just, it's just one of those moments. And I was part of that, but I also found it really frustrating. Like, I think I stopped playing. I think I lost one game to a friend. We used to play, it's like a day of move kind of thing.
Yeah.
Think about it and intense. And I was like up all night thinking about this thing, and I was like winning, and then slowly he turned it, like ate away at me, and eventually I lost. And I was so frustrated and angry.
Yeah. I'm the same. But it's interesting. I experienced that with nothing else. And maybe that's because I don't think I play like similar games. But if you're the feedback loops in work, and feedback loops in like other things are so much more long dated. You don't just get, it's just driving me bonkers. But it's interesting you had that experience. I just hate losing, basically.
Yeah, once you get to a certain level in chess as well, you need to kind of study it.
Yeah, I started doing that.
You get to a certain level, and then you just have to know what the optimal move is.
Yeah.
You then slowly learn a few tricks when people play certain things. If they haven't seen it, then you're basically almost guaranteed a win or an advantage. But then it kind of became a little bit less interesting for me, to be honest. So I was like, I don't want to study this game.
Yeah, I think that's fair. And I think, chess is unusual because it's somehow attracted a bunch of prestige and status. It's kind of sounds smart and clever, whatever. But ultimately, it's as absolutely useless as being really good at Tetris or something. And it's probably less embarrassing for me to say I'm addicted to chess than I'm addicted to pokies or Tetris or Mario game card or something, right? But actually it's the equivalent of dead time. And so I wonder whether I'm actually just going down this kind of dead end rabbit hole, and whether it's just cut it, or whether I'm very tempted to actually just read about openings and learn to be much better. So I'm not really sure, and right now it's something I just kind of do in between.
Do you watch Gotham Chess? We should probably move on, but just before
I haven't seen Gotham Chess. What's that?
Great YouTube channel, great guy. Okay. Plays game, explains it really well. He's also got a course.
I may have seen a couple actually, but yeah. Anyway, good chess interlude. And so tell us, you're back at your student again.
Yeah, so I'm just doing one course, a semester. So very little low time commitment, but really I've always wanted to do computer science, and just finally decided this is the time. Look, it's weird. Things have changed. I went to uni over 10 years ago now. I graduated over 10 years ago, and now the resources are insane. There's Chegg, the company, the listed company, that basically has the answer to not just every exam, or they have answers to assignments, perfect answers just written out, which you can pay almost nothing and have access to. And then you have these YouTube. Yeah, then you have YouTube and all these online what do they call them, MOOCs. You can literally do a whole lecture series online from another university on a topic that you want. There's no library work. I mean, you can go to the library and spend some time there, but it's not like you go and get the book and work your way through the book, and then struggle to find the answer for something, and then really you're just going through book after book to try and figure out what's going on. Now you just kind of type it into, I guess, Google and ChatGPT. Learning how to code with ChatGPT, you ask it to and for a financial example, you'd be okay, let's do a backtesting strategy where momentum days. Let's say you buy when it crosses the 200-day and sell when it goes under. Just something like the basic entry level, and then just like generates the Python code for you. Like, okay,
It does that.
Yeah,
ChatGPT does that today.
That's better, yeah, immediately. And then you go, okay, can you extend it so it adds this indicator, and then put a chart in these colors, and then it'll extend it to do that. And then you go, okay, you've got this wrong. This is buying on this day, but really you can only really buy on the next day. Is that correct? They'll be like, yes, we made an error. My apologies. We've now made the adjustment to that. Now correct it. Like,
wow.
Is there a faster way of doing this? And they'll say, yes, there is. Like, how can I optimize this strategy by different days? They'll be like, here's the code to do it. I'm telling you, that was like 30 seconds of me rambling.
That's incredible.
As you're typing this in, it's giving you answers. And you can ask it questions. So you can, I actually haven't used it to study yet because stuff, like I just did a course like a few months ago. So it's like ChatGPT is like new. So it's not even, it's like that new that it wasn't there when I was actually kind of doing a little bit of work in the space. But you can, it's just such a game changer for learning things. And the fact that you can probe it, why did you do this? Or is there a better way to do that? Again, it's like that process, that's like a day's work on Stack Overflow, trying to stitch things together, no clear answer, and Googling stuff. And instead you've just got this concise like output that you can then just copy paste and go for it. And I feel like there's people that are like, okay, I want to do a website that does this. Give me the steps. And then ChatGPT will give every single step. Like, this is how you do the front end. This is how you code it. This is how you style it. But like, can you add a bit of red in? Like, yeah. And then you can plug into Stable Diffusion. Give me a prompt for Stable Diffusion that gives me a good web design. And then it'll give you like list you like a very well constructed prompt to put into the image generators. It will then generate the image. And then you can ask it how to actually incorporate that into your front end. Then how do you do the back end? You can just ask and speak to it. It tells you answers. It is, and this is just code. This computer science is just like one tiny little aspect that it's really, if you try something, try the most simple example in that kind of way. Like when you learn to use it to ask it questions, to probe it, that's when you're like, okay, this is different. This is new. This is not an extension of search. This is a completely new thing that we didn't have. And so I think that's why I'm so convicted. So it's like, the last 10 years were obviously great to tech until it's like 20 good years and then a couple of really bad ones, and last year particularly bad, which is kind of my luck typically. But, if you think about it, there was like waves of revolutions from then. It was like iPhone, basically around the GFC. Then it was like apps, like mobile apps. Then search, which was actually around kind of back end of, I guess that was the original tech boom and bust. So it came before that. And then you had like cloud. There were just these, and social, there's probably like I think I just listed 5 major thematics, and each one was like a leg up in tech. And obviously many of them, they all needed more computing power. They're all very involved in the internet. There were a ton of tooling, a ton of companies that just kind of rode that wave as well. And this is probably like another leg. I'm pretty like, this is probably another leg.
Yeah. This is the internet again. This is unbelievable.
Yeah, and it's coming for, everyone thought it would be blue collar workers. Remember all those like thought pieces about what are the number one job is trucking. What are the truck drivers going to do? I mean, maybe at some point they are at risk, but actually it seems like
think of paralegals. Like this what are the precedents for this point? And it'll just go and just like give you, you're asking for code to kind of back test certain trading strategies. Surely the next step is back test this strategy. Right now it's not really connecting to a Cap IQ or a FactSet or a Bloomberg or whatever, but surely that's like the obvious step. And what happens when you kind of plug this into Renaissance or whatever?
You can download all the data from the public sources or from the private source. Or how do I take this data that's in a data frame that has every stock and all the data from Cap IQ?
Yeah.
How do I optimize this strategy that does this? Like it's pretty mind blowing actually. It's exciting.
Yeah.
It's really exciting.
Boom. Okay. Well, why don't we? That's a great spot to leave it, I think.
Sounds good. Hey, we should we say this every week, but let's try and do these weekly.
Yeah, let's do that. This was really fun and, really exciting year and epoch ahead of us.